Good morning and welcome to the Killik & Co market update. This week the FTSE 100 index has declined following concerns about the possibility of another national lockdown. It seems that regional leaders across the UK are not happy with Boris Johnson's three-tiered approach to try and combat the rising level of coronavirus cases, and a number of key scientists have been calling for another national lockdown. However, the rising level of coronavirus cases is not the only issue weighing on the FTSE 100. There's also Brexit. Boris Johnson had previously outlined the 15th of October as his target date to get a deal in place with the EU. However, this week, clearly that date has come and gone without an agreement in sight. And also because the FTSE 100 is a very international index, it's also being impacted by other events around the world, particularly in the US. For example, the lack of agreement on a government stimulus deal in the US, and also the up-and-coming presidential election. Here's the chart showing the FTSE 100 over the last 5 years, and as you can see, the index is still far below where it was 5 years ago, and what's more, it has certainly declined within the last week. The next few weeks will be important for both markets and the economy, and we'll be watching closely for any further news on all of these various issues. Investors all around the world are becoming more and more keen to make sure the companies that they're investing in are behaving in an ethical way. And we had a great example of this week when investors in Procter Gamble rebelled against the company because of its environmental practices. Procter Gamble is a major US consumer goods company with a market capitalization of over $350 billion, and it owns loads of well-known brands such as Pantene, Olay, Charmin toilet paper, Pampers, and in fact the company has been a major beneficiary of the stockpiling of toilet paper and nappies during lockdown. One investor in P&G has criticised the company for not doing enough to prevent deforestation, and for example the company continues to buy things like palm oil and wood pulp, which can be very damaging to forests if not bought from an ethical source. This particular investor put forward a proposal to force P&G to disclose its true impact on global forests, and that led to 2/3 of P&G investors agreeing with this proposal. And one of the investors to vote in favour was BlackRock, which is the world's largest asset manager with over a 6% stake in Procter Gamble. Over the last year, we've seen a record number of environmental and social proposals gaining majority support from shareholders, and it really does seem as though the sustainability trend is very much here to stay. The IMF, or the International Monetary Fund, is an international organisation aiming to foster global monetary cooperation. Historically, the IMF has been quick to recommend austerity in times of economic weakness, for example in 2011 when Greece was in trouble. However, this week the organisation has published its latest Global Financial Stability Report, and in it the organisation appears to be advocating government spending as a means of promoting growth and helping the global economy to recover from the coronavirus crisis. It's likely that any government spending would be heavily focused on infrastructure, and furthermore it's expected that future government infrastructure spending will be heavily focused on renewables, so it's possible that these latest comments from the IMF could lead to higher spend on future renewable power. Moving on to have a look at next week, it's fairly busy in the diary, and we've got results out from healthcare companies Abbott Laboratories and Thermo Fisher, and also results out from Amazon. That's it from us. Have a great weekend, and we'll see you next Friday.